All right, we're good to go.
There we go. All right. Hey, welcome everybody. Good evening. Sharpening Trading Skills interview with Nick Schmidt, co-founder of Trader Lion. Um, so everybody, warm welcome. We've got access to the chat. If anybody's got any questions or comments, just put them in there. And as they come up, we'll ask him. We're gonna have a conversation, get to know a little bit about Nick's trading style, his history. Hopefully, drop in some golden nuggets and nice lessons, and then kind of take a look at some recent trades, see what we can learn and gather, and how we can take some of those bits and pieces, put them into our own strategy, and become uh, better traders ourselves. Thank you, Manraf, for taking his Twitter. If you guys want to go give him a follow, I'm sure most of you guys already do already on Twitter. And yeah, he's also got what do they call it? The Twitter subscription or X subscriptions, which I'm actually in, by the way, Nick.
Oh,
I'm in
awesome.
there, so appreciate the work you do and the charts you send out in there. I encourage people to also sign up for that. You'll get some really good value out of that. So, anyways, man, yeah, co-founder of Traderline. So when we were talking on the phone, I found out something really interesting. Which I'm sure some people don't know, but you started Traderline, the business and the YouTube and the content we all know and love.
So, I, all four of us, so everybody knows Trader Line as me, Rye, Richard, and Ross, and it would not exist without the four of us. I definitely don't want to say like I didn't start Trader Line.
Okay.
I was the first to kind of get the ball rolling. Somebody basically years ago introduced me to Rye and Amit Rai, if you guys are familiar with him. And
Yeah.
me and him, kind of just connected and got the ball rolling and started what is now Traderline. But you know, throughout that journey, we met very early on Ross Haber. Ross helped us. I mean, before people knew who me and Rye were, we were very young. Um, and so he was a lot of the credibility. And if it wasn't for Ross too in the beginning, before we had, we were known, we wouldn't be where we are today. Uh, and then like a year after that, we met Richard, and we had Richard join the team, and he helped, really propel us and accelerate us because he's just an absolutely amazing interviewer, and he brought a whole new dimension to the team. So chronologically, yeah, me and Rye were introduced, and that's what ignited everything. But Traderline would definitely never be where it is now if it wasn't for the four of us. We're all equal partners in it, and everybody has played a major role.
And
Dude,
what was the inspiration to start that up? What was the initial idea?
I like years ago I was pretty active on StockTwits and in Discords and communities and stuff, and there was I just noticed there was just so much noise. Like for back a lot of
yeah.
words, there's just a lot of not good information. And I kind of wanted to like I mean we did when we started Traderline, we didn't ever think or have the goal like it would be what it is
Mhm.
today. But that was the motivation behind it. I just like when me and Rye met each other, I was an okay trader. He was like the best trader I've ever seen in my life. And, I just kind of like saw that there's some things that are super relevant that we're kind of seeing. And then he was showing me this entire new world of like, how to trade and how to look at things. And the motivation was really just like to create a community at first, even though we don't really have like a Discord or community anymore, but it was just to create a community and put out good information out there. And that was really the motivation behind it, I guess, for lack of, yeah,
Yeah, and then
better
you
words.
guys connected with Ross or Ross Haber, noticed that that ability and that drive in you guys. And what's been the impact of his guidance and mentorship been like? Because he's a William O'Neill disciple, I suppose you'd call him, right? Yeah,
Yeah, Ross. Ross has. I've always said like I've never met William O'Neill. I never got the chance to meet him, but I've always felt like I had my personal William O'Neill in my pocket because Ross, yeah, Ross is like a William O'Neill disciple. He worked with him for many years. Very, very successful, and he just kind of ingrained things over and over that just stuck with me. And I mean, if forget about the business like Traderline and everything like that, but if I never crossed paths with Rye and then Ross, I would not be the trader that I am now. They have had such a massive impact on how I look at the markets, how I approach things, and it's really cool. Like Ross has, he just has so much wisdom, and he's kind of similar to me in the sense that he feels like nobody, cares to hear what he has to say. He's not interested in like, saying too much, but when he talks, like he's made such a difference in my trading and he's brilliant. He's absolutely brilliant.
Yeah, I mean, that is, and then you've taken that, and then you guys have turned it into something that has reached hundreds of thousands, if not millions of people. Because like I said before this, myself, I've watched every single bit of content, participated in some of the things, many of the things that you guys have created. So I guess hey Ross and Ryan, if you're listening too, thank you guys as well. Then a little bit about yourself. What I know that you are like you like trading on weekly charts. You really drill that into people, the value of it. I saw this stat on your Twitter of the trades that you took 1 year and the trades that you then took in 2024 with the performance alongside it, where you ended up taking a lot of trades and the performance was it's all still good, but then the less trades you took, the better you performed. So just a little bit about kind of your trading style and how it's adapted most recently, I suppose.
Yeah, yeah, that's
You
it's
can put your screen up if you want to put your screen up. I just kind of your call.
yeah,
Uh,
yeah, I'll share my screen. Can you see my screen?
all good.
Cool, cool. Yeah, so my trading style is I mostly 99% of my percent of my time is on weekly charts, and uh that's even Ross uses primarily daily charts, and then we'll look at weekly charts. Rye, same thing, like he's focused on daily charts. Oliver Kell, right, like he's mostly looking at daily charts, even though when I was at dinner with him a few weeks ago, we both did say like the weekly time frame is the conviction time frame.
Hmm.
And something like if my biggest message that I try to get across is like there's so many ways to make money in the market. And so when I talk about the weekly chart and my experience and how it's really made a difference, I'm never saying that my approach is superior in any way. It's just that like trading, the biggest message I want to get across is trading has to be related to your personality. If you're a highly anxious person and like me, right? Like, you're a highly anxious person and you don't want to stare at the screens or you don't whatever, like then maybe day trading or scalping is not the best for you. And so what we were saying before, I think maybe before the start is there's just so many ways to make money in the market. And so the most important piece of the puzzle for me, in my opinion, is longevity. Like whatever you're learning to do, whatever trading style you're going to take up, uh, can you do it for 10 years, 20 years, 30 years? And so that's the most important part. Um, and I firmly believe that there's a few fundamentals when it comes to the market that is all you need to be profitable. And then beyond that, you can get clever however you want. So, I if I truly wanted to, I could be a day trader and I could make money, right? Like if a day trader who's been in the market for a very long time wanted to just use weekly charts, like he could do that and be profitable. So it's less about the strategy and it's more about understanding just a few core things and having it, just relate to how your biases, your personality, and is it something that you can do for a very long time. So you brought up a post that I posted, I think a few weeks ago, and my turning point was for me, like the way I ended up here is just I would sit here every single day and just stare at the market on low time frames and just place so many trades. And there's nothing wrong with that at all. But I ended one of the years like negative, and I placed hundreds of trades. And I put so much energy and focus and time into the market and I ended up down on the year. Meanwhile, the S&P 500 was up like 10 or 15% on the year. And so I just felt dumb because it's like, if I just bought the S&P 500, didn't ever think about the market ever again, I'd be profitable where, I'm sitting here grinding my ass off and, putting everything I have into this and I'm losing money. So that was kind of just like, the first wake up call. And then over time, I just would review my trades. And one of the biggest things that stood out for me was uh, I was just doing a little bit too much. And I would buy something and then sell it when there was no reason to. And I would be in and out of a stock like five, six, seven times, and I would have performed better if I just never touched it again after I bought it. And so that really just, I guess, inspired me to step back. And I kind of noticed that the biggest thing holding me back was me wanting to interfere with trades when I did not need to be involved. I identified a trend, I got a good entry, and the biggest thing holding me back at that point when I went through my trades was I'm watching it too much and I'm just analyzing it too much and I'm just doing too much. So that's a kind of a brief, I guess, background of how I ended up to where I am now. And I'm a very
So
extreme person.
you're saying that the transition to primarily focus 99% on weekly charts kind of balances out some of your personality, A, and then B, it also allows you to embody the phrase buy right, sit tight kind of thing versus
100%.
yeah, getting distracted or interfering with every hourly or even daily candle that might come on like a CPI day or whatever here and there.
Yeah, 100%. And like I just want to be clear, like I don't think that my approach is superior to anybody else's because I leave a lot of money on the table by waiting for something to line up on the weekly when there's something setting up on the daily, right?
Mm.
Like there's a lot of opportunities that I just pass by. And like I with Traderline, I work with so many good traders and have so many good connections, like Oliver, Marios we were talking about. And these guys they take a lot of opportunities that I don't. And they perform, if somebody had them manage your money, I would say go to them, not me,
Mhm.
right? Because they're going to do way better. So, focusing on the weekly chart, it has its pros, it has its cons, but for me, it's just like it just works, and
Yeah.
uh, it's just how I'm most comfortable in the market, and it just works with, how I kind of view things as well. I like to be able to step away and kind of not feel like I need to be watching all the time, even though I am still, no matter what,
Yeah.
right? Because we're just addicted to the market. But even if I'm sitting here all day, though, I'm usually looking at a weekly chart, and so it sounds silly, but if I'm watching the action like all day on a weekly chart, I'm still seeing the same things. It's just the moves are way less pronounced, and so the emotion it drives up is way less pronounced, and it allows me to just stay a lot more objective, I guess, in what I do.
So you've got Robinhood on your screen. I know you have a position in this from I think what like 40 47, give or take.
Which stock? Hood?
Yeah, Robert, yeah, Hood.
Yeah, yeah, 47. Yep, I believe. Yeah,
Right there on the weekly, and you entered this trade based on the weekly chart.
yeah, always. Yeah.
And okay, so why don't you let's just walk through a little bit of that. I've also got Robinhood from yeah, around the same price post earnings. Used the daily and hourly chart and stuff like that. So I'm curious to kind of hear how this triggered for you on the weekly.
Yeah, so I'm just pulling up trying to find my exact entries. So Hood was, yeah, 47.63. So yeah, that was about like this week right here. And I mean for me on the weekly chart, right, like a lot of it had to do with market context.
Mhm.
The market was correcting, and bear, I don't know what you guys call it, a bear market or a correction. Technically, by definition, it was 20% or more, so it's a bear market. But the way I view things is it should be based on time. I think the definition should be thrown out the window. Like to me, if we go down, it doesn't matter, like 30% and then recover within a few months, that's a correction, not a bear market.
I
I
agree.
know it,
I've always felt the same way.
So
yeah, it's
yeah,
a
bear market, bull market terms. I think bull market actually carries more a little different sort of weighting, but bear market terms based on 20%, I think is all noise. I don't think that makes any sense. I actually view
noise.
what happened in March and February and April as a crash. I mean, I think the market crashed for a period of time.
Yeah.
That's the way I view it. Like the COVID crash, I mean, I think it is like incredibly similar to COVID crash.
Yeah, like I don't care what the percentage is, but V shape like this, in my opinion, this is a correction. And 2022, like, where we had over a year of just a downtrend, like this is a bear market. So that's how I
100%.
view things. I know it's
Yep.
not the definition, but hopefully we can change that definition, going forward. But uh yeah, that's how I kind of view things. And so yeah, if we go back to Hood, Hood, yeah, I bought it. So I primarily buy on weakness or when things are quiet over a breakout. Uh, if I have to buy a breakout, I will, but I just try to get in on weakness or not if I can. So I don't exactly remember when the follow through day was, but we kind of had like this week right here before big moves in the market. There, like before a stock is going to have a really big move, it's very, very common for it to shake out. And so back in the day, I used to get shaken out of a stock and then I'd take it off my watch list and move on, which is like probably the biggest mistake I've ever made unwittingly. And now I know that if I get shaken out of a stock that like a leading stock, not just a random stock, like something that has leadership qualities and uh is a an institutional darling, like if you have a if you have a shakeout, it's generally you should pay attention. And so here, we pulled back, we had the correction, bear market, whatever, and then we gapped down this week and closed incredibly strong on huge volume. So we something that I try to pay attention to is like for me to sell something or I look for two closes below a key moving average. So the way I look at this is this, I know they're both the same colors, probably not helpful, but this slower one here is the 30 week, and then this quicker one here is the 10 week.
Yep.
And we closed once below the 30 week here, but then the very next week we gapped lower and drove decisively higher on big volume. So this is a shakeout and it's also a very decisive reclaim, which got my attention. Now, even though we had that, I don't just personally, I'm just not, too comfortable just buying it after this. But then the following week when, oh, actually, it's not even when I bought it. I bought it over here. So it pulled back and it retested the 30 week. So what when something goes through a key level, so the 30 week, like when this just decisively gets back through the 30 week, that's a really good sign. When it then pulls back and retests the 30 week successfully, that's the best sign. So you're kind of getting double confirmation. You push through the 30 week and then like, okay, this 30 week might be relevant. And then you pull back and you retest the 30 week and it confirms that, all right, it is relevant. And then we just pushed higher again the week after. And by this point, like I'm pretty sure I didn't enter on this week because the market might not have followed through yet officially. I'm honestly not completely sure, but then we had this other kind of decisive push here, and the week after is when I got involved because we had a little weakness, pulled back, and now we have both the 10 and 30 week above it, and I mean below it, and so it's just a low risk way to get involved, and yeah, Hood's been a monster. I mean, I've wanted to add to this, but I just there's literally no good way
There's no
to
chill. There's no chill. It just keeps going up. Yeah. So the follow through day on the QQQ was 422 technically. So it was right on that third week off the lows.
yep.
That was the first follow through day. Little bit questionable. I remember Mike Webster was calling it or was kind of debating a little bit on one of his videos about the fall today, but it's there. And then 423, then the next day was for sure a fall through day. So then that'll be that third weekly bar is those follow throughs for sure. And so yeah, okay. So then obviously you're still holding this up substantially from 47 up to 75 or 74, I think it's at. Now, you mentioned that you're looking to add. So is that's your approach with this stock right now? You're not looking to take profits right now, trim it off, or potentially, I suppose, if you get some sort of sell signal. So I guess my question in response is, what would be a signal or a kind of a pattern or path on Hood going forward to get you to add to this, and then what would be a signal to get you to then sell out of your 47 buys on this.
Yeah, so I mean if we look at Hood, I mean for me, this is like I wouldn't add here just because like and this very well could just continue going up and I'll sit in my position and it'll be like I just won't add to it, but I'll still hold my shares and that's fine. Like it's not always going to work out how I want, but for me, I'm not going like we're pretty extended from the 10 week here. So sometimes we meet the 30 week when the market gets a little bit volatile. You could see a few times here, but when this stock's trending strong, it should respect the 10 week, like you can see
Mhm.
over here. And so right now, I think like we look at where price is. Right now, the 10 week is like 20% below.
Yeah.
So to me, I just look at structure and we can essentially pull back 20% and nothing's wrong with the stock. And
Yeah.
so I'm just slow to add to a position because I don't want to, being long since 47 gives me a lot of cushion and that cushion helps me make better decisions.
Mhm.
I screwed that up with Tesla and it screwed up my whole trade. And so I'm very slow to add to positions. And so yeah, like when something can pull back 20% and still be completely fine, I'm just I just wait. I want to wait. And so what I'm basically looking at here is this is the prior highs on Hood, this line kind of here. Give it, one more week or maybe 2 weeks, and this 10 week is going to catch up to the prior highs. And when that happens, if we just move sideways a little bit and stop going up, or pull back and meet when they connect, then I will add to my position. But if that doesn't happen, which I honestly don't expect it to because this stock has been an absolute monster, then I'll just, keep riding my original shares and let it and let it work. But that's essentially kind of how I look at things, if that makes sense. I use everything for me, every decision is based on structure. And so the two main things I'm looking at here for structure is prior highs, which I have this line here, and then the 10 week. So I would expect that, I mean, for me, it would not be worth adding to this unless we get around like this 65 level, and then I can add to it. And I'm most concerned with not messing up a position because if I was to add here and then it pulls back, my cost is going to go up quite a bit. And now a stock that's up, 50% for me could be a bigger position and maybe up like only 10%. And then if we see some volatility in the market, I'm not able to think as clearly because I'm working with less of a cushion. And that's the most important thing to me. So when it comes to adding, I'm very, very slow and trying to be like a bit methodical. But if
Mhm.
I wasn't in hood, if I was looking at this as a new position, this pullback to highs here, the prior all-time highs, this little bit of pullback, I would have bought this instantly because it's a clear way to manage risk, right? Like if hood's gonna stick, we're not going to go back under this line. If we get below this, it's not that it's broken, but it's going to take a little more time until it's ready to set up and move higher probably. So I would like it's just a very good level to manage risk. So if I was looking to get involved in Hood, which is like one of the top leaders in the market, for the first time, I definitely would have bought this weakness here and use this to manage risk. Hopefully it doesn't fall apart. And in a week or two, the 10 weeks now crossing above, and it has all the ingredients, to get me going. But when it comes to adding to a position, I'm very uh very slow, if that
So
makes
what
sense.
about let's play this out over the next 3, 4, 5 weeks here. Let's say we pull back down into 50, let's say 58, 57, 58, 59, 60, somewhere around that mark, even 62. And over the course of orderly fashion over the course of 3 weeks, let's say we kind of drift down into $60. And then you've got the 10 week there. Maybe you get a little lower wick or undercut of the 10 week. Are you then you're holding through that and potentially then looking to add off of a strong candle or strong hold of the 10 week then?
Yeah, yeah, 100%. I think like it's not all black and white, obviously, as you
Yeah.
know. It's very dependent on, the environment and everything that we're in. And I firmly believe that we're in a strong strong market. Like this
Yeah.
is a strong market. You don't like V-shaped recoveries don't happen randomly. It's because, you have people buying hand over fist to get involved. And so, the V-shaped recovery we've seen in the market is essentially like, we have the market just in my opinion is freaking strong. And so yeah, Hood like for Hood, I'm essentially using the 10 week for my guide, and I don't use it. It's not a line in the sand at all. So for me, moving averages, like I said earlier, I'm looking for two closes below. So when I have a cushion in Hood, and I can give it the benefit of the doubt, if it closes a hair below the 10 week, I'm gonna hold. If it closes 2 weeks below the 10 week, then that's going to be my sign to, get out. But yeah, if this like pulls in and respects the 10 week, then I'm going to just like keep a very close eye on it for an ad. I'm not going to jump on it right away. But if it does pull in and respect this 10 week and then, maybe just a couple weeks sideways before it goes back up, then I'm absolutely going to add. Uh, a lot of breakouts for me, I feel would shake me out. And so something like this kind of, something a stock that has so many eyes on it and pushing through prior highs and going up, it's almost something that by default I just expect to everyone's watching the same level.
Yeah.
I would kind of expect it to fail, which the market can always do what you don't expect, and it always does what you don't expect. So that's why I say like I to add to this, I need to at least see it pull back and respect the 10-week, move sideways maybe a little bit, but it doesn't care what I want. This could absolutely just keep going to like 100, 150, 200. There's just no telling. It's just if this is gonna go to 200 and I'm gonna hold it, I need to be able to think clearly. And if I add to it at not the perfect spot and ruin my average cost, then any volatility that comes is going to screw up my decision making, and I'm not going to be able to hold that, to like as far or as easily as it can go.
I have a couple questions on that. So you mentioned that it could just go straight and break 100 and without giving you really a spot to add. Are there any scenarios where I'm not sure if you mentioned this, but like scaling out into strength? Are you always looking to trail stops as taking trims?
Yeah, so it's a bit it's dependent on like a couple things. So primarily, I know this sounds probably very foreign to a lot of people. Because like if you don't sell into strength, you will sell into weakness. That's a known thing.
Yeah.
Traders that I know that are a lot better than me, like we were talking about Marios, Oliver, they like to sell some into strength. And for me, a rule that I actually have with myself is I just don't sell into strength. For the most part, I will always try to sell into weakness. So for something like Hood, the way that I look at it is like it's highly unlikely that this is gonna reverse and come straight to the 10 week at 57 and I'm gonna get out at 57. It's possible, but it's highly unlikely. What's more likely is that this is gonna at least stay above this line for a week or two, and then the 10 week is going to quickly catch up and, get above here. And so that just makes my worst case scenario much higher. And it doesn't always work out. Like I was up 30% in Tesla and took a 7% loss last week. That was a huge error on my part. That was a rookie move. It should have never happened, but it did happen. And so I'm always looking to usually sell into weakness, but again, we're talking now about like Hood and this is a very high quality leadership stock with good earnings, good fundamentals. This is something that isn't very volatile where like another position that I'm currently in is QUBT right here. So QUBT, this is something that I approach very differently. Like this could go way higher, and so I'm not going to just cut off my potential profits and sell all of it randomly, but I absolutely sold a good chunk of it into the strength because this is something that, it's very likely this is going to round trip
Yeah.
and stop me out. So it depends on like the stock and the quality of the stock and uh, like the volatility, the ADR. It depends a lot on different factors, but yeah, most of the time, like just by default, I'm trying to sell always on weakness and improve my worst case scenario. But if I am trading a thinner name like this QUBT and something that's just a lot quicker, I will definitely take profits because the characteristics are just totally different, right? Like the whole quantum industry is way more speculative. I don't know if any of them make money. And if you don't make money, then you run on hype, and hype can be, shut off like any second. So
Yeah.
I'm very aware of like the types of stocks that I trade. So I don't want to say like I will never sell into strength, but it depends on, where we are, I guess, in the market cycle and how volatile the stock is that we're looking at.
So this QUBT, let's say we come back down, like you got a break even stop. What are you in this around 13?
My average or my position here is 1240. So
Nice.
like right here. So yeah, this ripped like so I always look at the weekly chart. I honestly have no idea what the daily chart looks like, but if we just pull up,
That's
the daily
crazy.
chart.
That's
Yeah, yeah, yeah.
crazy.
Like I was just talking with Ryan and Ross earlier today, and I was like, if I see a daily chart in front of me, I actually cannot tell if it looks good or it doesn't because I have just ingrained weekly charts in my mind. But uh yeah, bought it like 1240-ish and my stop was 1155, which I've said very publicly on Twitter that there's a lot of luck involved in this trade because the day that I bought it, it came down to 1165, so 10 cents away from my stop. And then the next day it ripped higher, 13 whatever, and then I believe this day, or I honestly don't know. Guys, I don't look at daily charts, so I have no idea what's going on here. But somewhere like this day or this day, I sold the third because it was a it was up big. I wanted, and I know that this is a stock that's very likely to round trip. So
Yeah.
I took profits off, and now the way that I'm treating it is essentially, if we go back to the weekly chart. So essentially, like we consolidated a little bit here, and we don't, in my opinion, want to return back to this consolidation. So I'm just letting the rest of my shares kind of go and ride. And if we get back into this little consolidation here, so like 1375-ish, I will be stopped out with a little bit of a profit on my remaining shares. Obviously not the best scenario, but at least I took profits and now I can just let it ride and we can see, I guess, like, what it can do. But that's how I'm treating this.
Yeah, so your worst case scenario on this is roughly a 10-ish% gain or so, maybe 8% or something is your worst case.
Yeah. Yeah, it's like whatever that percent is, whatever this percent is my worst case scenario. And where I don't know what price I took profits at, but I took a third off at 38%.
Yeah.
So regardless, like this trade is going to end up being a nice trade.
Man, it's
Yeah.
crazy how much clarity that weekly chart gives. I mean, I'm not even sure I've looked on the weekly chart on this in maybe a few weeks, but even the day he bought it, I mean, to me on the daily chart, it looks like it may be about to break down lower, or that it's struggling. And I mean, that's some of the cons of looking on a short time frame is like just the volatility, especially in a name like this, and potentially micromanaging a trade. I mean, this thing has so much range. I mean, a weekly chart kind of makes sense. It looks so much cleaner now that I look at it on a weekly chart.
Yeah, yeah, it's it makes like it's just clear, right? Like on the daily chart, a lot's going on, but I just love the weekly because I mean, basically what's going on here is you have this very speculative stock that's just downtrending, doing nothing, and then it just rips higher and on huge volume too. So this volume and this move is obviously not like, you and me. It's a big, fund, someone with a lot of money that's buying this for some reason. And something I like to always point out is that these funds, like if them buying it moved the stock from 80 cents to I would say like, six, or not all the way up here, but if them buying it uh went from, what is this? I gotta see what this is. Let's see. Like, yeah, so if them buying it moved the stock like 800%, you could imagine what them selling it is gonna do. Like they're moving around so much money that they're not day traders. So this type of volume that you see here. To me, it's clearly institutional accumulation. And if they're buying it like this, they're not, their plan at least isn't to sell it a week later. Like they're thinking much longer term. And so one of the biggest things for me is combining volume with the price. And so we essentially moved higher. And then once you have a move like this, it becomes on everybody's radar. And once it's on everybody's radar, you have just tons and tons of people, everybody's watching it. And so then we obviously have another push higher. And at this point, when you're at like $17 or whatever, and if you're an institution and you were buying it, over here, which I'll be honest, like I get a little confused about myself because institutions usually don't buy stocks under $5, but at the same time, this volume is huge. So I don't really know, but all I know is this is like massive accumulation. And if you're accumulating at these prices down here and then it's on everybody's radar, it basically sparks a chain reaction and everybody's now watching it. Everybody's trying to ride the momentum. And like I said, if you're gonna buy it and move it this much, when you sell it, you're gonna move it a ton as well. So when we finally do get the sell off, I mean, you could see, right? Like if you look down here, the volume on the move up, they're skyscrapers. And then the sell off, the volume is completely dried up.
Yeah,
So
wow.
that just tells me that like this is being extremely accumulated, and then whoever's accumulating kind of, they're not going to keep buying when everybody else is buying because they're just going to drive their average cost up. And so if they just don't touch it for a while, the momentum traders and the short-term traders are going to uh basically get bored because the momentum's gone and they just sell out very slowly. And that's what you see here. And whoever's buying this, like they don't care that it's going from, $20 to $5. They're just waiting for anybody who's selling to essentially be done. And when you have either tight action or you have selling like this on volume that is very, very low, it just kind of like it gets to a point where there's no real sellers anymore. And so then you see the very next week you have another big volume spike, like kind of pushes up. And so this is whoever's accumulating saying like, okay, price is probably not gonna get lower. There's not many sellers left. So we can probably buy now at like a good cost. And it pushes price back up. And then you kind of just round out here. And this right here on like this tight action is a higher low. And this tight action, again, you can see the volume here is non-existent.
Just
So
dries up.
it just dries up. And so if you have price moving tight like this and there's heavy volume, that's not a good sign for me because it like volume to me is the demand. So if you have heavy volume and price is not making progress, then that just means that you don't know what's going on. Like there's obviously a lot of volume coming in, but price isn't moving. So there's got to also be a lot of sellers involved. And so it's usually a warning sign. But when you have, dried up volume like this and price gets super tight, that's like one of the most reliable signals
Mhm.
that there's no sellers left and the whoever's accumulating is doing it very, very quietly, just trying not to move price at all. Uh, until, like if this, I wish it was on my radar here, but I wasn't paying attention over here. But then, you come back up, you push up higher, and then we have a down week. And if you look at the down week again, like all the down weeks are just the
Nothing.
volume is not there. And on the up weeks, the volume is there. And so it's an accumulation pattern that I really like. And so if you look at QUBT, like I said, I'm highly expecting something like this to round trip just because even if there's not a lot of sellers or real sellers, you could still see that this went from $20 to $5. So it can still completely stop me out round trip. I'll get out with not the biggest gain, but if we look at like the daily chart, today was an absolute awful day, right? Like we opened at almost 20 and we closed at the lows of the day, which isn't good, but the weekly chart tells me there's still a chance because if this was Friday and we were going into the weekend now, we have obviously huge volume here on this week. And the week is, we've closed in the upper 50% of the range. So despite all the, selling off intraday, the bad candle, stuff like that, I'm still seeing that we have massive volume and there's like, a chance. It's
Yeah.
most
Wow.
likely this is probably gonna pull back and stop me out at that 13 level. That's honestly what I'm expecting, but you just don't know. And so that's like how I kind of look at price and volume essentially. You just want to see, things dry up completely.
Oh
Hey,
yeah.
before we get to some questions in the chat, I have one more question. Since I know you use weekly charts primarily, um, I've always kind of switched back and forth between the arithmetic and logarithmic scale. Do you have like a strong opinion on that, or I noticed you're on a logarithmic scale right now?
Yeah, I definitely don't have like many strong opinions about anything, to be honest, but I find that I definitely like logarithmic, and I'll tell you I'll tell you why. Kind of trying to think of a good example. So
So we'll often make the biggest difference on a daily chart, but on weekly charts, when you have a lot of the big percentage moves, you can really see a difference.
yeah, they're just like I find that if you're not using a logarithmic on a weekly chart, then everything looks like an opportunity. So
Yeah.
if I pull up what's a good trade? So like some people will like one of my favorite trades is coming out essentially of, like this stock obviously had a huge uptrend, and then for a few years it downtrended, and early 2024 we made a low, but it was a higher low than the previous one, and we've been like even though it's extremely volatile, we've been moving sideways. So the way that I interpret this is here bulls are in control, here sellers are in control. But the past few years, no, like if there were more sellers than buyers, this would just completely continue to sell off. But the fact that it's going sideways means that there's an equal, what I'm trying to say.
Yeah.
Like buyers and sellers are like they're eating they're equal and it's being supported and something's changing. And so we have a higher low here, and then now we have another higher low here, and it's significant. And so this essentially like is telling us that this is, I mean, if you follow Stan Weinstein, this is a stage one, where it's, accumulation, and then eventually this is going to break out above this level here and turn into a stage two. But what I look at is the higher lows. And so if we're making new lows, that's a downtrend in my opinion. And if we're putting in higher lows, the character of the stock has changed from my point of view. And if we're putting in higher lows, like the trend is now up. So this is a China stock, which I just suck at trading China stocks, but I think it's a good example either way. Like here, there's an opportunity, but there like you still have to kind of figure out the timing and stuff like that. But if I turn this to arithmetic, like a lot of people will post a chart like this on on Twitter, and they'll be like, oh, this is gonna rip. Like, and on a weekly chart, on a weekly chart, if you're looking at arithmetic and you have a setup like this, everything looks like it's gonna rip. Like, looking at this, it looks like a no-brainer. You just buy this, and we're gonna skyrocket back up to here. And so you kind of miss the little nuances that make up the important factors of, okay, is that likely to actually happen? So I do like to keep logarithmic
That's a
and
massive difference. Yeah. Because on the
yeah,
arithmetic, the move from 10 to 30 looks like absolutely nothing, but on a log it puts it in perspective.
yeah, like if I was looking at arithmetic, like so a lot of people post arithmetic on weeklies because again, like if you show this and then like let's say maybe you put like a little arrow here, then it's like, oh crap, this is gonna rip, right? Like let's pay attention. This is gonna skyrocket, and that's, I mean, it gets a lot of likes, but you're missing, it's just not an accurate picture. Where if you look at logarithmic, I still do think that it will likely play out to the upside, but you're seeing a lot more realistic picture of what's going on.
Yeah, and arithmetic, I found arithmetic charts can also make stocks look a lot more extended on a weekly chart than they actually may be as well.
Yeah.
Like the stocks that make big moves. You want to ask a question in the chat, Pat?
Yeah, absolutely. So couple things earlier with your hood, I actually missed this. But like specifically about the price and time and day that you put that trade on Robinhood. What was the signal and the reason you got in? You kind of described the setup going into it and the 30-week leading up to it. But like the moment and the day and the time and the reason you put it on at the place you put it on, kind of what brought you to do that there that time?
Yeah, we just like had a follow through day, and my first position. So I operate heavily on feedback,
Mhm.
and also I'm very focused on leadership and not so much the indexes or anything like that. So a follow through day is a signal I rely on a lot, like for getting back in a new uptrend, but a follow through day without context of what are how are stocks behaving is completely irrelevant. Like if you get a follow through day, like if we go to, the bear market in 2022, like how many follow through days we had here, like on each rally up, and they're I can tell you for a fact that every time we had a follow through day triggered on these rallies, there were no stocks to buy. There
Yeah,
were no stocks like breaking out and then following through. There were no high quality names like, and so the quality of the leadership depends on a lot. And so one of the very first signs for me was Netflix was it's a high quality, like fast growing. It's an institutional darling, like that I like to say. And this stock was one of the first. You can't really see it, I guess, on the weekly, but uh, we had earnings somewhere. Let's see, I don't know, one of these days. It's missing, but we had earnings. Like I'm pretty sure this was earnings right here, and before we crashed earlier this year, anything that gapped higher on earnings would immediately be sold off, like immediately. And so any gap higher on earnings was used to liquidate positions and sell into the demand. And Netflix was one of the first things that tipped me off into, okay, maybe this follow through day is a little bit different because it gapped higher and then it just followed through and it kept following through. And that is a complete personality change in what we're used to. So for Hood, let me get back to a weekly
yeah.
chart.
Netflix's earnings were the day after the fall through day in the market, or 2 days
Y-
after the fall through.
Yeah, that was a huge tell.
Yeah,
Or a good like a big piece of the puzzle for me. It was like,
yeah,
okay, this is, like things are acting a bit different. And so all of that combined, like when I bought Hood, it just came down to, all right, you know, Netflix is the first kind of quality stock that's showing a personality change, something different than what we saw previously. I already put on a position in PLTR before this, and it was making traction. I had a lot of progress in that. And so I saw the character change in Netflix, and I also had the positive feedback in PLTR. So when we did, get this little bit of weakness in Hood after the follow through day, it's a no-brainer to just
Next
take
on
that
the
risk.
list of the leadership stocks of your shopping list that you are looking to build into. Do you what kind of position size in terms of percentage of your account are you buying at that time? You're doing like 8%, 15%? How big or how small are you going on that buy?
So I don't know what is considered like I don't know what's like normal or not, but I size everything based on risk.
Yeah.
So I'm usually risking between 1% of my account
Okay.
to 3% rarely if things are really cooking and like I'm getting a ton of positive feedback. So I'm always risking 1% to like 2% or 3%. If it's brand new, like if I'm getting a ton of negative feedback or it's a brand new uptrend, I might even start with like 0.5% of my account. And that's in terms of risk. So like
Yeah.
if I get stopped out, I lose 1% or 0.5%. And so that's how I size my positions, personally. And yeah, does that make sense?
Perfect, 100%. I do the exact same thing. To an extent, like like for example, if I'm trading on a daily chart and I see something with 50 cents of risk, I'm not going to go necessarily with like 80% of my account in order to reach that account risk parameters. But to an extent, like there'll be times where I'll go up to 40 or 50% sometimes, but kind of make some of those nuance adjustments based on yeah, just based on overall account exposure and whatnot. And then briefly, some of these questions. Any other indicators, any anchored VWAPs, Fibonacci, things like that, or you just price, volume, and the classic moving average, earnings and sales, all that good stuff?
Yeah, price and volume. To me, like, indicators are they're just kind of interpreting price and volume. They
Mhm.
most of them lag price and volume. I have nothing against indicators. Like I definitely think they can be good, but for me, I personally am not good at making decisions. Like I'm just a very indecisive person. And so over time, I kind of just got rid of any indicator because it was just another factor that had to be involved in making a decision. And I would hate, like, okay, I might see something, but then one indicator is saying be cautious and another indicator
Mhm.
is saying like,
Yeah.
buy. And that just trips me up personally. And it just makes me hesitate. And so I just found success in getting rid of that and just reducing the inputs to my decision.
Yeah.
And that's essentially it. So yeah, I focus on just price, volume, and the 10 and 30 week moving average,
Yeah.
honestly.
That kind of speaks to this next question of from this Maverick here. How do you deal with psychological tensions between trusting and relying on your system and then reacting to market noise or fluctuations?
Yeah, so one of the things I love about weekly charts, I don't know why I just had an accent for a sec. Weekly charts is like I said, I see all the same price, I see all the same action throughout the day. Like a lot of people assume when I trade weekly charts, they act like I don't get my data until Friday at close, like that, which isn't true. I see everything, but if you're watching, like I'm watching every week one candle, and instead of, having to decipher like five candles. So, the noise, like that's a really good question, and it's tough kind of, because it's tough to kind of put myself, I guess, in that mindset where like I know that if I take, five trades and they all get stopped out, at this point, I know for a fact there's nothing wrong with my system. There's nothing wrong with me. It's the market. So if I place, five trades and get five losses in a row, or my new positions are giving negative feedback and I'm getting stopped out, uh, I 100% it's the market environment is telling me that things are getting more difficult. And so sometimes I overlook that because if you're a newer trader or if you don't have trust in your approach, and the trust in your system and your approach will only come from consistency over time. Like you will never have 100% confidence in your system unless you could actually look and know that, no matter, like I've traded through so many market cycles, and if you've traded through bear markets, bull markets, and you have a baseline and you know that you're consistent like throughout, it gives you a ton of confidence in what you do. And that confidence lets me see things a little differently. So like I said, if I'm getting stopped out of positions a lot, like something I like to point out is earlier this year before we actually pulled back and like crashed pretty hard in the market, I saw a lot of setups. Like I saw a lot of trades and they like it looked like things were fine, but every trade I would try would just stop out immediately. And so even though what I was seeing is things look kind of fine, the feedback I was getting is things are things are difficult. Like everything I put on is getting stopped out.
Yeah.
And so that feedback, that negative feedback told me to step off the gas, raise cash, and because of that, I avoided pretty much most of the destruction when we crashed.
Yeah.
But that, I guess, the luxury of trusting the feedback is something that comes with trusting your system, which I think only comes with seeing consistency over multiple market cycles, where I sometimes forget that because if you're a newer trader or you haven't seen that, and like it's very tempting to maybe I'm doing something wrong, or
Yeah.
maybe so that's a really good question, which I do not know exactly what the answer is, but I can tell you, like, for me, I know that if I'm in the right state of mind and I'm seeing bad feedback, like it's not me, it's the market telling me something, like things are getting more difficult. And so I press off the gas. And so I think that's kind of a luxury of just, time in the market and seeing your, steady performance over time.
Yeah, I was just about to say that's the only that can only come from trading through or sitting out throughout a variety of different ebbs and flows of the market, a variety of different market cycles, making good decisions, making mistakes, seeing what that feedback was, and kind of listening to it or ignoring it and learning the hard way sometimes over and over again throughout months and years of doing it. Yeah, great question, great answer. You did kind of mention this, but is there a particular day, we should have weekly charts, um is there a particular day that you generally take more of the information and end up using one of those days for more entries, like a Monday at the beginning of the week at the weekly open, Friday at the end of the week, or are you still willing to enter trades Monday through Friday?
I'll enter a trade any day of the week,
Mhm.
anytime. It doesn't matter. I'm just looking at levels, so I don't really care. I guess the only like thing to that is, for me, the only thing that matters is the close. Like the close is the most important data point. And the opens, like if we have an open where everything's gapping higher, 1-2%, I I always, something I always repeat over and over is I will always prefer a gap down open over a gap up. Because if you get a gap up, there's really nothing you can do. And the natural reaction for everybody is to chase, right? You get FOMO, you want to chase higher. And usually what happens is like that dies down and then and it doesn't close as well, which I mean recently we've seen a lot of gap higher and close higher. So it's not an always thing, right? Like the market's not black and white, but for me, if I have to choose between gapping up 2% or gapping down 2%, always gap down, prefer gap downs. So if we get a gap higher in the morning, I'm almost I'm most likely to absolutely do nothing and wait for it to die down and see how things are by the end of the
Yeah,
day. But if we get a gap down, I love those because I look
better
at them
risk.
as like stress tests. So
Yeah,
yeah, if you get a gap down, like if I go back to my dashboard over here, uh what I have is I have price percent change from open. It's not just price percent change. So if like I usually just watch like the same group of stocks to get a gauge on the market, but this is giving like percent change from open. So a lot of times like the market might gap down and all stocks might be down 2-3%. And even if they move up 1-3%, they're still red on the day. But if you get a gap down and we hold the lows and everything from the open is getting bought up, that's the absolute best sign to, okay, this gap down is being bought. Where if you get a gap higher, like you really can't see the strength and you have to wait to see if it holds. Where if you get a gap down, you can very quickly see like, okay, this stock within the first 30 minutes is holding lows and it's being bought up. So this weakness is being bought. And that, I prefer that any day of the week.
absolutely, absolutely. Gap City is the worst city besides Los Angeles or Dallas, maybe. Um, that's from Canal Decides to Come. I probably can't make that LA joke. I'll have to change it. Where are you from? New York?
New York, yeah, I'm from New York. Same thing. Very close, very similar.
Right on, man. Hey, how long? What's your like average average hold time? Any? Do you have any of the stats off the top of your head or know them? Average hold time, average loser, batting average, anything like that that you want to
Um,
go into? Or we can.
yeah, I don't like off the top of my head recently, like I don't know. Last year I did put it together for a presentation and my average hold time, I actually don't remember what my average hold time is, but I could tell you it's like multiple months. I want to
Okay.
say like 3, 4, 5 months maybe. Uh and my average loser was from going off last year was about like 6, 7%. And then my average winner is like 100%, which sounds ridiculous to some people, but like it's not because I'm a genius trader. It's very different from a shorter time frame. Like on the weekly, like if you're looking at intraday charts, getting 100% trade is not common. But if you're looking at weekly charts and you're holding for months, 100% moves are they're common. They're very
Yeah.
common. So for
Stocks
me,
love to
it's
double.
yeah, yeah. Stocks, like if you're in a strong market and you're zoomed out, like stocks it's very common for a stock to go 50, 100% plus. And so for me, like whenever I'm setting my risk, it's always I'm looking within 7%. And just knowing that usually if I have a winning trade, it's like at least 50% makes, 7% a no-brainer because it's just multiples of that essentially. I don't place many trades. I don't play.
What about yeah, in terms of there's a phrase, right? The best horses don't back out of the starting gate. You want to see, a winner from the get go. Are you placing entry, placing stop, and letting that stop hit, or if it's not moving for let's say another week or another 2 weeks or even a couple days, are you adjusting that stop or getting out for a smaller loss? Or are you just letting the stop take do the work?
Usually if I enter, I don't touch it too much.
Mhm.
Um, so I usually just let it work. So it's like I'm kind of just getting stopped out for a loss, or I'm kind of holding it until like, it plays out. So I usually try not to touch it too far in between, but I mean it gets a little difficult because when we're in a market like we are now, where there's so many stocks that look good and so many stocks are moving, um, then I have to make decisions like, if I like right now I have a good sized position in Netflix, and I've been long Netflix for like two like literally Netflix I've been long since almost the bottom of the market, and I think I'm up like 13%. And so I have to make a decision at some point. It's like, all right, do I want my capital sitting here just kind
Mhm.
of grinding? Because I kind of bought PLTR and Hood and Netflix at the same time, and Hood and PLTR are up 50% and Netflix up like, not a lot. So yeah, I have to make decisions sometimes like, all right, maybe my capital is not worth being here and I can rotate it into something else. I really do try to not like think like that too much just because I used to back in the day like have a problem where if something wasn't moving quick enough, I would try to just get out and then rotate it and move, and I would end up just getting impatient and missing the bulk of the moves. So I try not to do that, but yeah, I definitely have to make a decision sometimes in terms of like is this just dead capital sitting here?
Is there like a max loss that you'll have on your account? For example, if you're 100% long, I don't know if you use margin or not, if you'll end up being more than 100%, but will you monitor the amount of overall portfolio risk if you see, if the market, for example, pulls back all at once? Will you'll just continue to let the market do its thing, your positions do its thing, and the stops do their thing?
Yeah, for the most part, like I'm very slow to move stops up, which could definitely be a weakness, like we saw in Tesla, right? Like you should never let a stock go up 30% and then sell it for a 7% loss. So it could be a weakness, sometimes it's a strength. I'm definitely like slow to move stops up, but I'm focused on like always improving my worst case scenario, and most of the time I've just noticed like a lot of it has to do with a lot of it is heavily related to timing. So um getting involved right near the follow through day is very beneficial versus obviously getting traction the past week or two has been a bit more difficult and mixed reaction. So all of that definitely plays a part, but like for my positions that I've got good entries on and I've got a big cushion on, I'm really like just focused on improving my worst case scenario. So I don't have like a max kind of like if the market crashed tomorrow and just pulled a COVID, I would lose almost I would lose a ton of profits that I made this year. Uh so there's that, but I would not expect that to happen.
Mhm.
Basically, like just looking at Robinhood, right? Like how I mentioned the 10-week now, like when you're moving up this quick, and then if you start to move sideways, the 10-week is going to catch up very, very quick. If we look at PLTR, it's the same thing. So I bought PLTR like probably like 80 somewhere over here. Let me see, 88. So I bought PLTR this week, and it's the same thing too. If you look at
That's
Hood,
fine.
right? Like Hood, we had like big push higher, and then this pullback is where I bought. And same thing with PLTR. PLTR, we had the big push higher, and then the little pullback, and that's where I bought. And so, uh, now the 10-week is has caught up the price because price stopped moving up and we've kind of been consolidating. So very quickly when price stops going up and it just kind of pauses, my worst case scenario goes up very, very quick. Uh which happens, across everything. But yeah, definitely like a weakness is like if Hood just, pulled back and aggressively tomorrow, I'm gonna give up, most of my profits. So it's a, there's nothing perfect. Everything's like give or take.
Yeah, there's pros and cons to every strategy that exists. And what about the current market? What are you seeing from some of the leaders? What are you seeing from some of the weekly charts? What are your thoughts? I know you heard my rant on Twitter Spaces. I do like to throw that, be a little bit entertaining. I mean, I do think that is where I stand. But I'm also mindful of some of the near term stuff. But yeah, what are you seeing? What are you thinking? What's some of the feedback?
No, no, I wanted to correct myself like after you spoke in the Twitter space, because before you spoke, I was saying how I'm a little cautious because we've seen mixed feedback and stuff like that. And then you came on, you're like, oh, this is the strong market, like blah blah blah, like and I totally agreed with you. And I
I
realized
heard,
that
I heard your response. I heard the response. I was taking my kids to swimming and I was still listening in. And
yeah, like
by the way, I agree 100%. And I've been saying the same thing in the group too. I was like, come on, I'm kind of taunting the market right now to get a pullback, to get some further consolidation, because we are extended from the 10-week moving averages right now, from even the daily moving averages. We're extended on a lot of stocks. So I'm sitting there like, trying to get the market to punch me in the face a little bit to get some better, tighter setups. Anyway.
yeah, like the big like I feel like a lot of people look at pullbacks as bad, but to me, pullbacks or just not going up for a while is like healthy. That's what sustains the next move. Like pullbacks or consolidations make the next leg up sustainable. So like I say I've been a little cautious because like it feels like there's some signs we might get a little pullback soon. But yeah, I didn't want people to interpret that as, let me be like they should be nervous because any pullback that we get, like I said, it's healthy. I will be viewing it as an opportunity. This market is incredibly strong, and there's just like there's 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 tough markets, there's good markets, and this is one of the strongest markets that I can remember trading, honestly. And I think like what makes it difficult for a lot of people is it's so strong that it seems almost like not believable. Like it's so strong and everything's just going up, and it's, I mean, it's valid. Like when you get a V-shaped recovery, um, you just naturally feel like you can't chase and it's got to pull back. And that's why I tell everybody like you got to trade what's in front of you because even if like everything's just as long as you manage risk, like nothing matters. So, the risk of waiting for a pullback and missing out on a move is the same risk as buying something and getting stopped out on a pullback. Like everything has a risk. So, like you've gotta like it makes no sense to. I honestly like if we pull up the spy right here, um, I think like somewhere over here, I was saying I feel like we're gonna get a pullback, and if I just went with that feeling and didn't buy things that were looking good in front of me, I would miss out on a lot of opportunities. So, uh, the market can just it doesn't have to be logical, and it doesn't have to like it'll just blow your mind all the time. So yeah, I view that this is like an incredible market in my opinion. I honestly am viewing it exactly like COVID. So here we had the sharp sell off, jump above the 30 week, quick consolidation, and we're moving higher. And then if you look at COVID, it's the same thing, right? Like COVID rip higher, V-shaped rally, consolidation above the 30 week, and then we move higher. So I'm literally looking at this as kind of the exact same playbook. And like even though I might feel and even want a pullback, I would love a pullback. Like even though I might feel like it's coming and I would want a pullback, uh I'm not gonna hesitate to buy something if it's breaking out or acting well, like right in front of me.
Yeah, absolutely. And man, the weekly charts really do and yeah, end up putting a lot of this into perspective. Man, Nick, it's been it was awesome. Thank you, man, for coming on. A really awesome feedback from the group. We had a good crew on here. Some people have logged off, but I'm sure they'll hop in and watch the rest of the recording. For everyone on here, where a lot of people in the group follow you. We posted, some of your tweets and stuff in here. We talked about your Twitter subscription. What else you got going that you'd recommend to us?
Dude, anything, right? Like I like to, I do have a $5 Twitter subscription, but there's no secrets behind it. Like if you're not profitable, you're not gonna find a secret behind it that's gonna make you profitable. I personally, the $5 Twitter subscription that I have, I personally look at as it just kind of filters people a little bit. Like if I post all my thoughts and everything publicly, you just have all these like trolls and people just saying
Yeah.
dumb stuff. And also they're just not committed where like $5 you have a little bit of a paywall and it just makes the experience so much better. Like it's a more committed group that want to like actually pay attention and learn. Like there's no trolls and I can just kind of post my thoughts freely and stuff like that. But yeah, I mean, like regardless, I feel like without the subscription I post pretty good stuff. So if you follow me on X, like I post a lot of like thought process stuff. But yeah, I really don't have anywhere like to direct people.
You
Just
got a book recent book or anything?
yeah. We actually just we've been working on a book for the past year and a half with a publisher, Harriman House, and it was just released I guess 2 weeks ago now. It's been very successful. It's actually
I have mine
it's
upstairs.
what's that?
I got mine upstairs.
That's
I got mine
awesome.
on my
That's
desk right
awesome.
now.
Yep.
That's awesome. That's really cool. That's really cool. Yeah, somebody posted in like some country, I don't even remember, that they have this huge tower and it was in the bookstore there. So that's really cool.
That's
It's really
awesome.
cool because like from what we've self-published books on Amazon sometimes and like we've had a lot of sales and stuff like that. But it's like still us publishing and sometimes we run into like, quality issues or something like that. But this was done with Harriman House, like a big publisher. And it's been almost a 2 year process and it finally came to life like a few weeks ago. And it's been, I totally underestimated, I guess, like the power of a book. And it's very, very cool to see. So yeah, definitely
It's awesome.
check
I
it out.
mean, if anyone left in the chat that doesn't have the book, I highly recommend. It's on Audible as well, and it comes with a PDF too. When you get the audio version, I believe, right, a PDF version will come out too with the model books or with the pictures in it. As I heard that from someone. But the model book in the back is absolutely game changing. I mean, just scrolling through the hundreds of charts in the back, let alone the actual the other content of the book and the lessons and system approaches. Just incredibly valuable. I think yeah, years from now, if not already, you've the book you guys have done has been cemented in the Trading Hall of Fame book next to next to the greats of How to Make Money in Stocks, Reminiscence of a Stock Market Operator, and Stan Weinstein's book as well. So absolutely appreciate the work that you guys have put in into that and everything else that you guys have done. Nick, have a good evening, and let's stay in touch, man.
Absolutely.
Yeah,
Thank you
take
very
care.
much for inviting me on and everybody here. Thank you for spending your time on a Thursday night. I appreciate it. And
Someone just messaged from
uh
Europe. They're here at 1:30 a.m. listening in because they wanted to show up.
There we go.
That's
that's
awesome.
so cool. That's so cool. Yeah, let's keep in touch. I'd love to come on again or join you guys and just follow what you do. I appreciate it.